Hello, I'm Carole Foos, and I'm a principal at OJM Group, and today we'll be discussing fourth quarter tax tips for 2015. We'd like to thank you for joining us today. Before we start on our topic, we do want you to know that OJM Group is an SEC registered investment advisor. This video is for informational purposes only, and the information may not be suitable for your personal circumstances. So please contact your professional advisor before attempting to execute any of these strategies. We do have some OJM materials that are free to you for attending our webinar today. You can see them on the screen. They include our national book for doctors only, as well as some state-specific books for doctors. We have risk management, CME piece for doctors, and we have wealth protection planning books and fortune building for business owners and entrepreneurs. And we'll talk at the end about how you can obtain your free copy of the book. So just so you know, today taxes are the highest they've been in this country in 30 years. Many of you now face a 50% plus marginal income tax rate and capital gains rates of 23% to 33% when including state and local income taxes. Planning is very challenging because Congress has not yet passed any of the expiring extenders. And in the past couple of years, they've been doing that very late in the year, so it makes it difficult to plan at year end. And when you add on to that a turbulent stock market and economic uncertainty, it really is difficult to do tax planning. However, tax planning hasn't been as important in the past 30 years as it is today because of these increased rates. So we just want to give you some thoughts today on ways to reduce your taxable income between now and December 31st. You can defer income into a deferred compensation plan if you have such a plan. Also consider deferring the exercise of stock options and the receipt of any bonuses if you've got the ability to do that. You should fund your qualified retirement plan. If you're a business owner and you don't have a qualified retirement plan set up, there is still time to do that between now and the end of the year to take advantage of the ability to defer that income. You can also consider postponing the receipt of income for this year and accelerating 2016 deductions into 2015 as a way to reduce your taxable income. If you've got unrealized business losses, it might be a good idea for you to realize those losses in order to take advantage of them this year, along with losses on stocks. You can harvest your capital losses against capital gains, and that means realizing the losses on those stocks to help offset any capital gains that you might have this year. In doing so and in realizing any losses on stocks, do be aware of the wash sale rules. That means you can't acquire the same stock that you sold at a loss within 31 days, or you won't be able to take the loss. It might be a good time for you to convert an IRA to a Roth IRA, especially if you happen to be in a situation this tax year where you're not at the top tax rate. If you did a Roth conversion earlier in the year and have seen the market value of that account drop, you actually have the ability to recharacterize that earlier conversion. Also, between now and December 31st, it's a great time to plan for your charitable contributions. Consider whether you want to make additional contributions this tax year in order to get the deduction this year. That might include contributing appreciated stock to a charity in lieu of cash in order to get that same deduction as though you had contributed cash, but to avoid paying capital gains tax on the appreciation. When you're doing all of this year-end tax planning, Make sure you're also considering what effect such planning might have on your alternative minimum tax situation. You know, for some of you in an alternative minimum tax situation, doing things such as prepaying state and local income taxes or real estate taxes won't have the desired effect. Personal exemption situations should also be considered. If you have a health savings account and you haven't maximized the funding of that account this year, you'll want to do that between now and December 31st. As a business owner, you will want to purchase any needed business property in order to take advantage of Section 179 expensing. Keep in mind that unless Congress passes those extenders, that limit for this year is $25,000. Also, make sure you are taking advantage of the de minimis safe harbor election to expense inexpensive assets, materials, and supplies under the tax conformity rules. If you have a passive activity, it may be a good year for you to dispose of that passive activity in order to take advantage of any suspended passive losses within the activity. And also, between now and year end, you should look at your basis in your business if you are expecting to have a loss in your business. Make sure that you have sufficient basis in order to be able to deduct the loss. We talked about the fact that some of the tax provision extenders are potentially expiring unless Congress acts between now and the end of the year. I wanted to give you some examples of those extenders. The deduction for state and local sales taxes in lieu of deducting state and local income taxes is set to expire. The expanded Section 179 deduction, as I mentioned earlier, as of right now, reverts back to a $25,000 deduction. There's expiration of the tuition and fees deduction. Bonus depreciation is expiring. The ability to make a charitable contribution directly from your IRA. The energy efficiency tax provisions are expiring, as is the exclusion of gain on the sale of small business stock. So we'll keep an eye out on whether Congress does vote to extend some or all of these. In thinking about your tax planning as well, don't make tax planning just about this year. You want to tax plan for the future, and this will involve tax diversification. As you can see on the screen, there are different ways that your various assets are taxed. Some assets are taxed at ordinary income tax rates in the green bucket. Those in the orange bucket are taxed at capital gains and qualified dividends rates. And those in the blue bucket are tax-free. So it's a great plan to fill up all three of those buckets in terms of your wealth management planning. So in terms of what advice should you consider for the fourth quarter, think about the tax reduction strategies we talked about today. Consider tax diversification for the long term. Make sure your investments are being managed with a focus on the tax drag. And certainly make good business decisions independent of tax implications. It doesn't make sense to spend $1 in order to save 50% of tax. Make sure that any spending done for a tax deduction is a good business decision. Be aware that these extenders may or may not be passed by Congress, and because of that, it's going to be important to keep in close contact with your CPA and to be able to act quickly should any of these extenders be passed. In terms of how OJM works with clients, today I covered one specific area, tax. We do have expertise in a number of other areas, including wealth management, insurance, financial planning, asset protection. We would love for you to visit our website and see some of our other webcasts on these various areas to hear from other members of our teams who have expertise in these areas. Who is OJM Group? Well, we specialize in working with business owners and we've been helping business owners for over 20 years. In fact, we've got clients in most states throughout the country. Despite this, we do know that every client is unique. We'd like to have the opportunity to talk to you and speak with you about how we might be able to bring value to your wealth planning, either at your business or personally. We have a multidisciplinary team that includes attorneys, CPAs, certified financial planners, MBAs, and investment and insurance professionals. And we work in 3 different divisions for our clients: insurance and benefits, wealth management, and consulting. So we can work with your business or with you individually or in some combination. We also have a firm commitment that qualified clients can receive, will receive 200% of your fee in savings ideas, or will return the fee. The next steps for you, we'd love for you to get a copy of our book for doctors only, or Fortune Building for Business Owners and Entrepreneurs, or one of our other books that we referenced earlier in the presentation. We'd also like to offer you a free consultation. You can contact me at the number on your screen or at my email address, which is also on the screen. And to receive your free book or a free ebook, you can visit our OJM bookstore website and use the promotional code WEB1015 at checkout. Thank you for joining us today. We hope you've enjoyed the presentation, and please do look for our other presentations on our website. Thanks.